Hey traders, Raghee here, and in this free recap video, we're going to talk about how we set up the morning and how oftentimes that might be the most important part of the day. So let's define, first of all, what I mean by morning, especially when we're talking about a lot of these futures contracts that have really nearly a 24-hour trading cycle. I think a lot of folks forget that when you're talking about metals, indices, currencies, energies, and treasuries, which are focused, which are the markets that I focus on, they, barring a few little naps, as I like to call them, where the market might shut down for 15 minutes, 30 minutes, 60 minutes, for the most part, they do trade 24 hours. And so we need to think about what time of day are we looking at for number one, trading, and what the associated price movement is for that time of day. Now, the associated price movement, that'll be a conversation we could have at a later time, but let me just show you here. Suffice to say, every market has a rhythm of the day. I'm going to show you the NASDAQ here because I'm going to walk you through a NASDAQ trade that we took today. So look at the rhythm of the day. Here's a 24-hour day broken down into 1-hour bars. And you'll notice, depending upon the time of day, it's a very different amount of movement. Like this. Okay? Now, here we have the lower end. This is kind of the Asian session, right? What happens in here? Europe and the UK open up, Asia closes, then we're kind of waiting for the US to open through here, and then boom, we get the open. Notice after 3 o'clock, 4 o'clock, everything drops. Why? The New York trading session is over. We go into a few hours of waiting before the Asian session opens, and very quiet Asian session trading. So one of the things a lot of traders who look at the market in a 24-hour way forget is not all 24 hours is created equal. You have to adjust your trading plan to the volatility that you would see for that time of day. All right. The other thing to remember is this. When you are setting stops and targets, entries and exits are key. It's something that we emphasize a lot in the room. In fact, I'm going to go call it exits and entries. A lot of traders talk a lot about entries, but the trade is either protected with a stop loss or you realize a profit with the exit. So the way I look at it, it's exits and entries. But that'll be something we can talk about later. Let's talk about the exits and entries with the NASDAQ. So thinking about the morning, what does that mean? Well, morning could be any time up until, noon Eastern. I'm talking specifically about 30 minutes in the day, which is known as the clearing. And the clearing period is between 9:30 and 10 Eastern. So what we want to remember with this 9:30 to 10 o'clock Eastern period is the Wall Street bell rings and the market sort of tips its hand, if you will. It shows us where the selling pressure and the buying support comes in, and that is what we use to take advantage of movement and get long or short. Now, today's trading up until the clearing was very choppy. It's really hard to look at everything that preceded 9:30 and say, I kind of get an idea of direction, right? I don't think that was clear at all. I think it's a big question mark. So we wait for the clearing to reveal what sentiment has in store. And then where sentiment goes, momentum follows. Where momentum follows, eventually trends can emerge from that, can organize from that. But it's really important to have a bias. And our bias was really to the long side, focusing on buys. And that's what ultimately got me to send out an alert. Let me show you what the alerts look like. So here's the alert that went out. The contract month, the market, of course, the time frame, and then I looked at really 2 buys. And I'll include the strategy. In other words, whether it's a buy stop or a buy limit. A buy limit would have been a nice buy off support, but I also wanted to keep the buy stop, a play through momentum, as a valid entry. So at 44.75, we were off to the races with an initial target at 67. And then I'm really not ruling out a visit to 94, but here's what's great. At this point within the life of the trade, we're at a break-even stop. We've already realized a profit and we've minimized our position size, which are all ways to pay ourselves and reduce risk. In If I want to go for that 94 target, terrific, but I'm only risking unrealized profit at this point. For some traders who don't want to take this trade into the sort of the after hours or the Asian session, exit at 80. It's a heck of a day to be able to take 35, 36 points out of the market. And this is just one of the trades we took this morning, but this is how you can use that 30 minutes to let the market reveal itself to you, okay? So a few takeaways here. Think about 9:30 to 10 Eastern, and think about your exits before you think about your entry. Where would you get out? What would be your stop loss? What would be your exit to the profit side? And then think about how you'd fit that entry in to that zone. We'll talk more about that, but I'll see you in the next update.